Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey, what's up everybody? Welcome to the Laughing Stock. It's been a wild week. Sorry I've been gone for so long. I went to an Airbnb down south and the internet was horrible. So I didn't have any chance to do much, and it kept cutting out. So that's why I didn't even try and stream down there because it would just ruin the stream. But I'm happy to be back. It was nice to be on vacation during all this because there was a lot going on. So, today I tried to spend some time getting caught up on things. I still feel like I'm a little behind, so which is good for the stream because there's lots to catch up on. Johnny's been here. Thank you, Johnny, for covering for me. He stepped right in when I needed him. He even ran Saturday's stream by himself. The guy's he's a warrior. But Roaring Kitty's back. There's so much to go over. Even if you read, just what I put before here too. The guy's just posting, just memes, just nonstop memes the whole time. So I don't know if he's got something up his sleeve. I'm assuming, just knowing him, he seems like someone who would have something up his sleeve. What it is though, I'm curious. I don't know. I have no idea. But we both said it'd be awesome if he came back streaming too. This was all inspired by him. So we'll see. We'll see what the future brings. I did take part in the meme explosion. I saw him post and I was already looking at GameStop actually because on a chart I actually thought it looked pretty good and it was starting to pick up some volume. So I thought I was going to put it because part of the new strategy too is I'm taking things on like that I wouldn't have in the past on here, and you'll see the portfolio is up to like 80 stocks now. It's ballooned up quite a bit. Although I still have cash, so it's not a bad thing. I actually kind of like how it's been working, and so far it's done great. You don't need a whole lot of percent each day if when you have that many stocks, as long as they're kind of trending in the right direction. And it's pretty easy too when all the position sizes initially are somewhat similar. Then you can kind of play it as it goes. So I kind of like having the more shares or the more different stocks in the portfolio, which I didn't think I would. It's going to be a balance between having that kind of diversification and also still shooting for, over, the 50% returns essentially. It's going to be difficult in a different way now, but it will hedge some of the risk too, and obviously the goal is 50 to 100%. If I don't hit it, even if I'm hitting 30 or 40%, it would still be fantastic. So, but specifically with the portfolio that we're always showing you guys. Now this is mine. Johnny obviously says his is different, and he's really kind of all in on Alto at the moment. But he is working on diversing. I saw in the last stream him and Max talked about it, as I was able to. And Johnny's just this is just one portfolio for him. So he's basically been working on trying to split it out, but at this time, just because of where Alto is, he figured it'd be better to average down. He's still long Alto, so to him it makes more sense because he thinks he's going to get all his money back, and probably more. And to be honest, it's not going to take a huge catalyst in Alto to possibly get it back up to I don't even know what his cost basis is at this point, but I'm sure he'll get past that, and then he'll probably, once he's comfortable, start, spreading out of Alto. So, I understand his strategy, so, you'll get to see both of us, his strategy as he tries to, stick with that company and really work through it. I've really minimized my Alto position at this point, so for me, that's not a large position at all. But I'm following it from the sidelines as always. Either way, we'll hop in here. I haven't even checked X in a minute, so let's see if anything's going on here with GME here. Oh, see, Roaring Cased. Well, this is 6 hours ago. But yeah, it all started with this one. That's stupid him leaning forward. And I saw someone post, and at first I didn't even believe it was him. I was like, and I still don't. I'm not convinced it's him. I'm sure it is, because I feel like he would have said something, and would have said, hey guys, that's not me posting. So I do believe it's him at this point. And also too, it's just insane. These number of posts. And these aren't something, unless he's using AI, this isn't something that you're coming up with in 2 seconds. This is well planned out. This is weeks of planning all these videos, and I don't know. I don't even know what to say. So if he does come back, it'll be cool. It'll be cool to see what happens from there. I do think this is a little hysterical to them starting to blame him for saying that he's posting memes and it's messing with the stock market, when there's such blatant corrupt politicians in the United States, especially in the Senate, taking advantage of insider trading and then going on the stand and saying that it's not insider trading when clearly it is. I think they were saying Pelosi's portfolio is up $20 million this year. No offense, you're not a genius, but whatever. I don't want to get political on here, anyways. But yeah. So I can't believe he's back. That was one of the last things I saw coming, was that RK would come back. So we'll see where it goes from here. Just pull up Seeking. I'll see. I don't think really too much has been going on. There's obviously a lot to follow. The funds all posted yesterday, so maybe we'll go through some of Burry's and just different stuff. We'll just start looking at different tickers and see if anything is interesting to us. I already got a bunch pulled up in the dashboard. Yeah, and I guess we could just hop right into the dash today. I added a few. You'll see down at the bottom here. Make sure you guys can actually see it here. Added the meme stocks into the risk category here. Although I'm just noticing here, I never put a underline on those. And I don't even think the font's the same. Whatever, we'll fix it later. So you can see too, it's really up and down. I don't even know what it's doing right now. I don't know aftermarket, but a huge, I was looking at it, somewhere on this breakout here. That's when it started to catch my eye, and I was like, it's really starting to come back. So I was thinking it got interesting there, and it was on decent volume on that too. So, and then I saw RK posted, so I did hop in on it. I hopped in a little late. I didn't even think about it. You can tell how long it's been since I've been in the memes, because I should have immediately thought AMC, BlackBerry, all those ones are going to go up right now, because that's every time you see one of them go off, that's what happens. They all go off at the same time. So I didn't hop in BlackBerry and AMC soon enough. So I took small losses on those two. I did hop in and these are small positions. I'm not going crazy with meme stocks. Like I said, granted, I'm all about taking some risk on, but I knew it was going to be up and down, and who knows, and with RK posting too, initially when I first saw the post, I didn't believe it was him. So, because it's just strange to go radio silent for 3 years, literally legit 3 years, not say anything, and then all of a sudden you just have this, surf wave of memes to go through. So, I don't know. I'm sure he's obviously been busy during these years. So I don't know. We'll see what comes up. But I did capitalize on GME. Like I said, it wasn't a huge position. I think I took just over a 1% size position, but it was up 60% when I sold. And I told myself I've done the meme trade before. This is not something that you hop in and then you ride. If you want, you can try and trade it, something like that. And I'm not like a day trader, so that's not my specialty. I maybe swing trading a little bit. I'll hold stuff for a week or two if it pops. That I'm not scared to get out of it. BMTX, huge win for me today. I actually just sold the position because I didn't think it would take off like it did. It was up like 50% in a week. So that was just a good call, I guess, or lucky. I shouldn't say it was good. But we can show you the portfolio here. So obviously you can see I have ballooned this portfolio out. It's got a lot of stuff in here. There's reasons why, like for instance, like Tesla's so high. Like it's just because of the share price. I bought probably a few more shares than I should have, but I think it looks good right now. I'm down just a little bit. I can't remember exactly what my cost basis is, but I think it could hit up to 200, which I don't know. I think the whole thing's kind of sold off, but I thought the chart was looking good. So that's kind of what actually got me to go into it. And then I decided to average down a little bit. So it's honestly not that crazy of a position or anything like that. But either way, it's bigger right now. I'm not looking for a huge return on that one, but I figured it'd be interesting. Tesla's something I normally don't buy, so sometimes it's fun. With this style too, and this is something RK touched on too. It's a lot of trial and error. I'm just if this is gonna be my risk portfolio, I want to play around and just see what I can get on these things, see what ones kind of come up. You'll notice, some of these don't even have information on them, which means I might have just bought them on the chart or something else. Some kind of news caught my eye. Obviously, those ones are probably lower down in the list here. And I've been buying and actually selling some of these. I've been trimming some of these. I've been adding to some of them. You'll see there's a mix of metrics. Typically, I'm still focused on metrics. You'll see probably as I go down here. Even some of these, some of these might be just, there's a biotech in here, which probably means I just thought the chart looked good. So if you see some of these too, those might actually be more of like a trade type scenario. But I figured if I'm going to balloon out the portfolio and I'm going to have easily 100 stocks at times, and that number will probably vary. Like I said, I still do want to shoot for the larger returns. So with that being said, I might have to shrink some of these down, because with the diversification, am I going to be able to find enough stocks to find that kind of return? Or with this and a little bit faster turnover, if I'm just snagging percentages here and there, and I try and cut the losers quicker. And I've been trying to buy on the way up too. That's a big change, and I'm using my charts in a different way to try and help me on the way up to keep buying on the ones that I think look good, or I think the narrative's good, or earnings came out and killed it and no one else seems to care, because that's one thing I keep seeing on a lot of these, especially some of these are smaller cap ones. You'll notice too, I bought some larger companies. Obviously Tesla, Pinterest is in here. I thought Pinterest looked good. I bought Baba, so I'm in there with Burry. Let's do that one. And too, Chinese companies, but I think with a mix of everything, and like I said, I'm relying a little bit on the technicals more so. I got Cortiva, Delta Airlines. I bought an airliner in here, so we'll see. Like I said, some of these are up and down. It doesn't matter. And you can see some of the percentages on these are really small. These aren't huge positions at all for the portfolio. But I figure I'll get them in there and then kind of average up and down and see what works for me. So, and like I said, guys, this isn't stock recommendations. Just as a disclaimer, as we always say too, don't think you can buy these. There's reasons I'm in these. It's very complicated too. Like, to me, I can probably look at a ticker and tell you what I liked about it, or if it was just on the chart. So some of these things are going to be faster trades. Some are going to be more long time holds. Some of them are like a starter position because I wasn't able to do quite enough research on them. That's actually quite a few of them. I just thought, I might as well get a position now, and especially with me being able to average up. Sorry, I'm pouring a beer. We'll get to the point where I'll start to just dial each one of these up that I really like, but yeah, a lot of these you probably see towards 52-week lows. Not all of them, and not a lot of them. Some of them don't have a ton of room to move. So it's not that every one of the stocks. That was a big, criticism of myself previously, is with me taking on just a few stocks at each time. You're trying to shoot for such high returns, and don't get me wrong, that's definitely it was working. I just wanted to diversify a little bit. And instead of putting all that weight into just a few stocks, just keep my eyes open for what else is out there. And I think by, at least in terms of risk in portfolio management, especially having all these stocks in here, it's going to force me to keep assessing what's working and what's not. Like, when I buy something on technicals, which technicals are working? When I buy things on fundamentals, how close is my valuation to where it gets? What are the lows? What are the highs? How does the chart relate to that? And it's like I said, it's all, it's just all common stuff with investing, but just to keep working on getting myself to keep it better. So, but yeah, so like I said, there is currently maybe just shy of 80 positions in here. So I did upgrade my charts here, so you can see on the charts here. And this cash is wrong. I don't know what the hell's going on with my thing. That cash isn't right. It doesn't even add up to the total number. So I'm not quite sure why it's off and it's different, but whatever. I'm more like 30% cash in, so I'll have to look at that. It's something to do with the cash over here, how I have it listed. But like even over here, I don't know. It should be like 40% right now in cash is what it should be. So the graph's obviously off. But however I had it before, it was saying it was like 60% cash. And I'm like, I don't have that much cash. So I don't know. Obviously, I'm terrible with numbers or something because something's not adding up there. But it doesn't matter. Where else are we at here? Is there anything else to say about this? You'll see still kind of relying on insider buying as some of these names have peaks. And like I said, there's already been a few names in here that have been up 50%. AKA was a big winner. That was up a ton. BMTX, like I said earlier, was. I'm sure there was others. So some of these, it jumps up so much so fast, and it's like I said, it's not like a crazy kind of position or anything like that. So I'm just trying to work on taking the gains and not always thinking, do I need to do anything different than that. So AKA started to have a pullback today, so I took that out, but it's almost a double in such a short amount of time. It's ridiculous. What else was there? So BMTX's chart. I mean, I don't even know how to explain that. Was there really news on that? I didn't think there was anything that was so crazy going on with it, but obviously the market liked it. I don't know what it's doing in after hours. It's down a little bit, but I mean, someone's selling 10 million shares at a time here. But look at this. Look at this volume. 12 billion, and it normally has 10,000. That's insane. Yeah, was this what it was? It was up a little bit, 0.7 million. I mean, it's not a bad thing. I mean, net income of $700,000. But either way, I mean, for it to jump like that, you don't see that kind of volume with some of these stocks. And the other thing too is, like I said, I'm looking at technicals down here, and I'm starting to see this, breakout in here, and on RSI and stuff like that, it still looks like it's relatively it's not overbought or anything like that. So as it starts to trickle back in, and then what I'm doing basically is I'm going to my fundamental sheet here and just trying to get like if we had BMTX here, hold on, I gotta hit enable on this. Just let this update real quick, just so I can. And I've been adjusting my valuation calculator. You know, and I've been just trying to think about too, like how much I want value to specifically indicate on when to get in. Obviously, the margin of safety is huge. It's really nice to have that margin of safety, but you know, you can't always get it. You know, sometimes the market hands you something and it's a decent deal. So, you know, I got 222 as a value on this. So when I got in, you know, it was well shy of that. So that's what I'm saying. So, you know, I start to see the breakouts. I'm using the technicals. I'm checking out my fundamental analysis on this. You know, it looks relatively safe. You know, that's the other thing too, especially with some of these small caps. No debt. You know, earnings and stuff have been struggling, but it's been positive in the past. You know, they got share count down to 12 million, and they've been generating cash flow. I mean, it's not like I'm doing anything crazy here. Yeah, it's a small market cap, but you know, I'm not going to rule out small market caps. I don't want to be overly critical of looking at small caps themselves. So, and you'll see my ranking for it confidence wise was only a 2. So that's you know, not, like I said, it wasn't like a huge position, but you know, chart looked good. Fundamentally, it was good. So even though I wasn't super confident, I think I had taken, I don't know, like just over a 1% position size. You know, so to be up, it's like 60 some percent or something like that. It's, you know. And like I said, you know, some of these will be trading down. You'll see some of these are going to keep shrinking because I'll probably, some of them I just cut it off. You know, if I think I saw something I really didn't, I'll just back out of it. But other ones, I'm just kind of taking my time and just kind of watching. I'm trying, because like I said, some of these positions are a little bit faster, and I don't want to trade them per se. Now, like I said, something's up 60%. That doesn't mean I'm not going to sell it, but trying to check on it, like, you know, see how it's doing week to week. More, you know, that's more like the speed I'm trying to watch these at, is week to week. And if something's really got some legs on it, you know, month to month, and then from there, just kind of using the chart to find when you really start to see a serious pullback, you know, maybe to trim there. And then, you know, if I think the fundamentals still look good too, and it holds up, you know, seeing, I mean, you know, buy on the dip and keep it in the portfolio. And I find too, as I start to get low on cash, that'll probably help me to get out of positions, you know, the ones that are up that it's not as compelling to sell just yet, but, you know, I'm like, I mean, it's ran for a while, and, you know, I want to raise up cash for something else I see. I'll kind of run into that wall, and that'll help me to kind of push things out of the portfolio and get new stuff in and just kind of keep things somewhat moving. So, like I said, it's very different than if you had watched my streams before. Obviously, you know, I talked about this kind of changing as we went here. But overall, not too bad. FSI had a pretty good day, up 7%. You know, some of these larger positions for me. EVC is still down. I've been going back and forth on this one. This one looks compelling to me, but I say that, I mean, it's the largest position size in the portfolio, and part of the reason is because I've been averaging down a little bit, but you know, it's 217 here. I get 374. Earnings are down, margins are down a little bit, but revenues keep growing. Share count's up a little bit. You know, this last year was rough, so I get that. The debt isn't due right now or anything like that, so I wasn't concerned about the debt. I mean, I don't know what else to say about it. Look at the chart here. So obviously it's recovered. I didn't get down in there like I wish I would have. So I don't know. I still think it looks like it's got room to go. I mean, this was obviously a ridiculous sell-off here to go. You know, this gap down is pretty insane. Maybe next time too, I'll be able to catch it down a little bit lower here. But either way, I just think, you know, even and I'm looking at 7-year trailing bases on most of these metrics. That's how I come up with my valuations. Mostly is on 7 years. So, with that being said, it looks cheap to me here. And it's traded up to $5. Is that? Oh my gosh, I can never click the right thing. So it's just been hovering around there. I mean, you look at like a 3-year chart or a 10-year chart. I mean, this is lows. These are lows. Besides COVID, it hasn't been down this low. I can't even remember. I feel like there was it Kingdom who had wrote about this? Yeah, Kingdom had wrote about this. They still got a dividend going. New CFO recently. They didn't say much in the transcript, so there wasn't a ton to go on there. So, like I said, it's a bigger position here too for me. So I'm probably not going to add much more here. I'm just going to kind of hang out and kind of watch this one. But I do think there's room for this one to run. It seems kind of cheap to me here. Irresponsibly cheap. So, and so is the market. And yeah, I mean, if you guys have any questions on any of the tickers that I'm in and what I liked, let me know. Or if you have any tickers that you want to throw out to me tonight, just let me know. We are going to be doing the stream on Saturday, although it'll be early. So Johnny and I will reconvene and go over everything then. But you'll get to see what was moving at the end of the week here. I did update through this week's insiders, and I have, like I said, in my fundamental page here, just a couple different tickers to I feel like I just looked at these guys. And I didn't think they were cheap enough. I'm surprised I had this one clicked. I must have liked the metrics. Either that or I clicked the wrong one. Because I think this is what was kind of killing me, was the earnings here have been really poor for a while now, since COVID essentially. And even though revenues were up in 2021, they're way back down. If you haven't heard of them, the company offers merchandise at multiple price points and styles from established brands, as well as its own private labels. They offer 2 different fixed schedules: auto ship, where a client can elect to auto ship fixes every 2 to 3 weeks, monthly, blah blah blah. Demand option allows clients to schedule a one-time fix at any time, either instead or in addition to utilizing the auto ship option. On-demand clients are prompted to schedule their next fix each time they check out. Company's Fix is a Stitch Fix branded box containing a personalized assortment of apparel, shoes, and accessories. But you could have started with that because that's really the business. But either way, actually, one thing I don't think I did check on this was I was wondering if anybody had owned this. Working capital, Lake Katrina, random name, benchmark. Yeah, there is quite a bit of owners of this, and a lot of them have been recently bullish. That's a good amount of shares changing, but how many? They have 118. So it's not that crazy. Trading at lows. Not intraday. 1 year. So kind of following it down here, I think it's going to go. I think it's going to pull back a little bit more. I'll probably be more interested. Shy of $2 here. It's only ever gotten down to 2 before, but I think at the path it's on right now, I look at the tangible book per share, it's $1.80, according to mine. It's trailing 12 months on mine, so it's a little different. That was another thing too, Max, if you're watching. So I saw you had been talking to Johnny about it. If you want to compare your numbers with any of the ones in here too. Just you know, it kind of how Johnny had said too. Our numbers between Y sheets and share radar are relatively similar, and you know, it's trailing 12 months, and mine are adjusted. I do use the adjusted ones, and I think you guys were going back and forth on quarterly or annual. And me, I try and get all my stuff quarterly, but it depends on the filing. Some stuff from outside of the U.S. doesn't have. They send it in bi-yearly or just annually, which also kind of stinks too. Like you know, it's tough when you only get the numbers once a year. You know, I don't know how you put too much into that position, but that's also a nice thing too. Like I was saying about position sizing, where before I was concerned because I didn't want to take on a ton of stocks that were just more what I would consider noise. Doing it this way, it allows me to kind of enter those with the idea that, you know, they're going to be a small position size, you know, 0.5%, maybe 1% too, if I see something else about it I like. You know, that's kind of how I've been sizing it. So if it's, for instance, just on like the chart, I'll probably do like a 0.5% position or even 1/4%, and then maybe learn, you know, see if I want to average down or up. You know, it's not a rush, especially when you have this many tickers, because you're not gonna be able to keep up with them all. I can scroll through the charts on them. That's the one thing I can do to kind of keep an eye on them. But just trying to really stay up on top of what's going on. It's tough having this many shares, especially as just one person. But it keeps you on your toes. I don't know. It's working. So far, it's been working. So we'll keep with that. So I don't know if I have much to add here. You know, it's just been struggling recently. Did I pull up Seeking? I did not. You know, and just I think I looked at this before, and everyone's kind of sell, hold, sell. I mean, this is, when does this go? This is all 23, January, February, March. So it is decently followed, but it's all kind of, from what I had read through these, it's all kind of poor. You know, on a valuation metric is the only thing that it looks okay on. But like I said, I think it's going to trail down a little bit longer before anything else comes of it. So I added it to my database, but it's not like even on deck or anything. So I don't know. I'm sure if I see the name, I'll just keep kind of checking on the chart just to kind of see where it's at. I've been loving my feature too of sorting on here, because I've been going through the database and then just pulling in a bunch of tickers, you know, based on metrics I like, but then using the technicals to kind of screen through these, because, you know, you got like 200 tickers and like, you know, they're all within like your value or whatever you want to call it. You know, it's worth just kind of peering through those. So you'll notice in, where is it here? On my dashboard, one nice thing that stock charts let you do is it has all these different ones. So, you know, I'm making like lists for my great companies, insiders, stuff that's on deck, my watch list, and that way I can just like the portfolio. You can just bring them up real quick and just look at all of them real fast, you know, and that way each day, if I'm just checking, you know, those, you know, even if I'm checking one a day and just kind of rotate which ones I'm checking, it just kind of keeps an eye on things. And that's another thing too, the faster turnover. You know, if I miss something, it's not the end of the world. There's going to be there's something else to look at. So there's owners though. I should put that in for them. I guess it's been a little bit since I looked at them. I had 264 before. Whoa, and I got 146 now. Whoops. I did adjust a lot of my my valuation calculators. They're arguably harsher than they were before, but I figure what's the big deal? I mean, you know, if I see something that can meet my valuation criteria on here, then it's worth looking at, because it's stringent, and you know, but it doesn't stop me from buying in. You know, it just gives me an idea like, hey, this looks like it's going to trend down. Which was really more the goal of my my way of doing this now. So let's see, is there anything else going on here? The debt is fine. They've been paying it down actually. Share count's increasing though, so I don't really like that. Margins are poor. Yeah. Let's see if there's anything else. They haven't been buying anything. Yeah, I don't. All right, so here's a new one I have not looked at. This is a Uruguay-based company. It's focused on enabling global merchants to connect with emerging market users. Company offers payment platforms for emerging markets through the company's direct application programming interface, or API, one technology platform, and one contract, which is collectively referred as the One dLocal model. The company enables global enterprise merchants to get paid and to make payments online in a safe and efficient manner. The company's cloud-based platform powers both cross-border and local-to-local transactions in approximately 29 countries. All right, so interesting. Include retail, streaming, ride-hailing, financial. Okay, so kind of a mix of different things. Anywhere where you can put cash through. It's actually got a pretty big market cap, bigger than I would have thought. I got to go through these numbers because they look real good, actually. Looks like it's growing. Return on for the investors has been poor, but I mean, what's its enterprise value? It's lower. Yeah, so I mean, it has no debt. Cash flow positive, earnings positive. Obviously, it's trading for growth, and that's another thing too. You know, I've been trying to take growth into my consideration. Not that I'm going to add growth in, because I think it's kind of ridiculous to assign a growth multiple to some of these things. Like, what is its growth percentage? I have no idea. I'm not a growth investor, and I'm not going to pretend to be. So, where do I think it'll be trading in 10 years? I don't know. That's not the goal with this portfolio. But based on just these few years of numbers that we have, looks good. Haven't been wasting a lot of money. No debt. A lot of cash. So maybe that's actually an area they can improve. I'll send this to the database. We'll check the chart. So obviously some bad news here, but you'll see too, it's had bad news in the past, or good news in the past, and done the exact opposite and jumped up. So obviously the growth story has been better in the past. This was trading really high, and maybe it's just not growing earnings fast enough. I mean, it is, book value is increasing, so it doesn't look bad to me. Retained earnings are 33% compared to assets. It's not bad. We'll see if anyone's talking about it. Michael Wiggins. He's been following this one, it looks like. Recommended a buy back here. It's gone down 43%. Okay. Now he recommends a sell. How convenient. And it's gone up 3%. Timing is impeccable, Mike. See, this is what I'm saying. Investors that expect DLO to be a rapidly growing business in emerging markets, but it's not meeting those expectations, which is exactly why I don't like to do growth. It's just really tough to nail those. Like, I guess in this portfolio, you know, like I said, I might go in on the charts or maybe something on like this, but and this one might even get oversold too, because like I said, it actually looks like a decent business. I'm sure people aren't pumped about the well, I mean, I'm kind of pumped about these growth in revenues. The only issue is that it's trading at $1.97 right now, which is still high to me. So who knows what the heck these guys were pricing in, you know? And if you were somewhere a buyer in any of this nonsense, but you know, it's traded down before here and popped right back up and has been a double since here. So I don't know, something to keep in mind here. You've had another day here, way down here at the bottom. It's oversold now. Yeah, I'd have a hard time entering here. It's definitely too expensive for me. But other than that, looks pretty good. And I feel like, you know, emerging markets and stuff, you know, it's tough. I'm sure it's got to be tough in some of these countries to get capital. So if these guys are able to allow payments to go back and forth between different countries and whatnot, it's probably pretty successful in that idea. I wonder what are they actually predicting for their growth? I like to look at the presentations, but I don't like to hold too much on them too, which is part of the reason why I wonder if they said, what is it? There we go. Get out of here. I don't need a... Oh, 39 countries now. That's what I'm saying. Like, it's not growing as fast as these guys, as like apparently the market wanted it to, but it's not bad. What is this? This is third quarter. Is this really 22? This is old. Is there do they have presentations here? Am I blind? I guess not. I just don't want to read an earnings call right now. That doesn't really do anything for me. Did anybody comment on the earnings call? No, they're all talking about memes. All right, either way, doesn't matter. I like the stock, just too expensive right now. So let's say it's a tech company, there's foreign risk, it's too expensive. I'm gonna put it on DEX, I like it. It has good fundamentals so far to me. It's a fast grower, fast for me. I guess everyone else wants it to grow faster, but that's your problem. Low debt, anything else to say? I don't know what else to say. That's good for me for now. And I'm gonna rank this as a 3. And then, like I said, I thought it was rated around there. Like this buy column, I'm literally just doing a 50% reduction in cost because like that was the goal is to find it down here. If a stock hits these numbers, it's like a buy immediately because it's so ridiculously underpriced. You know, unless it's, I mean. If it's hitting those, I got to really check for bankruptcy. That's actually the big concern because it should not be trading that low. There's no reason, either that or it's like the ugliest cyclical you've ever seen. But those numbers are extreme is basically what I'm trying to say. And this calculates for leverage too over here. So probably pretty rare. Like I said, I'll see a stock there. But if I do see a stock that low, I'm probably going to take a small position and just kind of watch it from there just because stuff should not be getting that cheap if it's not dead. Because that's basically like a starting to get to bankruptcy pricing. All right, we got the great Cantaloupe. It's a global tech company. Vertically integrated solutions fuel growth by offering micro payment processing. A lot of these same companies, as well as kiosk and point of service innovations. Or It offers a variety of solutions for self-service commerce when enabling the acceptance of digital payments. It allows its customers to simplify inventory, analytics, warehouse logistics, and back office management. Its hardware includes Cantaloupe card readers, the company's integrated payment device, as well as Cantaloupe Go POS kiosks, the company's Ranger POS terminals, which are both deployed in self-service applications such as vending, micro markets, amusement, arcade, everything. So it's a bunch of kiosk type thingies. All right, so share count's been increasing. Revenue's been going up slowly. Book value's been slowly increasing. Earnings have been improving. They had some rough years right before COVID, and since COVID, they've actually been doing all right. It generates cash flow and some simple free cash flow. Had a little acquisition last year for $36 million. It's a little expensive, but not crazy. I get fair value at $442. Has plenty of cash for debt. I don't know if that's actual debt or if that's all just like leases. Come on. $14 of it's in leases. So they actually have about 36 in debt, which is all due in 2026. So fine, that's not even a concern. No dividend. Margins look okay. I mean, they don't look great by any means. Which is probably why they've been adding on these shares here. They've been diluting themselves. So I don't like the dilution there. And when had they just took all this debt on too. So obviously struggling to keep operations moving along here. But not terrible. Charles Argan likes it and has liked it month to month. EPS of 6 cents beats by 2 cents. Revenue of $67 million misses by 1.75. So they're not growing as fast as they had hoped, but they still have earnings. So I'm just reading here. Businesses are famously reluctant to change their ERP software. So they have a little bit of a moat there in terms of having to swap out. CEO, CFO, and CRO were all replaced in 2022. It's a long... More important driver of Cantaloupe's projected EPS growth over the next 2 years is margin expansion. In 2023, EBITDA was up 80% because of a 10% increase in gross margins. Subscription transactions gross margins ended up from 39.5 to 44.2, and equipment margins went from -4 to 20.8. Equipment discounts ended perhaps because of supply chain issues impacting the overall economy, and perhaps because industry M&A has decreased competition. Cantaloupe switched their payment processing for Oracle to AWS so they can onboard new clients faster. Cantaloupe forecast equipment margins of 10%, payment margins 20%, and subscription margins at 85%. Obviously, then the best way for Cantaloupe to improve margins would be to shift revenue from equipment and payments into subscriptions. And this is exactly what they're doing. Encouraging customers to shift from upfront purchase model to a subscription model in which they rent the equipment and charge a fee. Well, hell, if they can hit these numbers. Out of 28,000 customers, Cantaloupe One subscriptions increased from 0 to 10,000 in 2022. By Q2 2023, ending February, there were 15,000 subscribers, and now by Q4, there were 24,000. In the last quarter, the company declined to give a figure, but said that growth had continued. It's probably slowing down. So probably it's close to 24. In revenue terms, the adoption has been slower, so Cantaloupe's biggest customers are slower to switch. So he just uses a relative valuation, which I honestly don't know what a typical valuation is for these kind of company. But if it does continue to grow its earnings like that, I mean, this will skyrocket. Although the numbers that he's saying, and then he's also saying that they're not really giving it in terms of how much it's going to grow by. He said a target price of $15 in 2.5 years. There are unanswered complaints in recent of March 2023. I wonder if the company made any changes around then that they might explain why the complaints stopped. Sorry, my cat wants to get out. Give me just a moment here. These animals. We're dog sitting. I got more dogs than normal. I got cats. It's getting a little wild in here. Oh, it's got down to 580. Yikes. That actually looks it's definitely more interesting around 5. I actually kind of like the story on this one. I just wish I could get this on a little bit of a pullback here. I can't believe it jumped up to 7 and then back down, and now it's back at 684. What has this done historically? Wow, it got down to 3. What? $3? And that's what he wanted to buy. Oh my god. $3. Whew. And it has gotten here. There's definitely support in this, in resistance, I should say, actually, in this area. This one's interesting. It's a little expensive right now, but it's gotten cheap before. What I get? I got 442 as a fair value. It's kind of a pain. Too expensive on deck. It's got a good narrative, possibly a fast grower, foreign risk. I think it has low debt. Just going back and forth if I want to add here. I can see this pulling back too, which is part of the reason I'm like, but I think it's worth holding on this one. I think it's, I could see this get up to, I don't know, where's it been trading here? Pull this down a little bit. It did take on the debt though. I think this is a wait for me. It's just kind of missing enough for me to want to go any further into it. And if I would have bought at one of those lows, it's definitely interesting at the lows. I'm gonna hold. But I put it on deck, so I'll try and keep an eye on it. Geospace Technology Corporation designs and manufactures seismic instruments and equipment. It operates through 3 segments: oil and gas markets, adjacent markets, and emerging. Oil and gas market segment includes wireless seismic data acquisition systems. Sorry. Back to work, man. The yawns are, it's real. Blah, blah. Devices to detect seismic stuff. Imaging equipment, water meter products, remote shutoff valves, kind of everything for the whole. Also mine safety applications and earthquake detection. Emerging market segment designs and market seismic products targeted at the border and perimeter security markets. Okay. Seismic products are marketed to the oil and gas industry and others. Okay, so it's measuring materials, actually. Or equipment, I should say. Share count's pretty low. Revenues have been higher a long time ago, and it's struggled for a while now. Trading around 10, which is a little high for me, but it's a pretty safe. Looking business, you know, I mean, it doesn't look like it has crazy debt or anything like that, just before I actually look at the debt. Earnings wise, it struggled for a while, but this last year was positive. CapEx has been creeping up, but it's not bad by any means. Yeah, no debt. It doesn't look like margins are terrible. See if you want to say anything about it. Minus 32% EPS, and that's from May 9th. So they did not like that, obviously, in the earnings there. It's been down to 4. I mean, this looks like almost the same story as the last one. Like, it doesn't look bad. It just looks kind of expensive right now. Soft outside of a large one-time equipment sale, and management expects muted rental activity until later in the year. Revenue from GEOS' adjacent market segment has stalled in the past 2 quarters, which is likely having an outsized impact on the company's valuation. Well, the company's valuation remains low, particularly when accounting for the company's cash balance and accounts receivable. Stabilization of the industrial business will likely be needed to drive the stock higher. They have cash, but the business actually needs to perform, is what he's saying. What an insight. First quarter revenue was approximately $50 million, up 60% year to year. Growth was always driven by $30 million US sale of ocean bottom nodes that were previously being rented. So it looks like going forward, that's not so great. Yeah, and you can sell stuff off, but that doesn't really do much. Yeah, I'm not sure. This one doesn't even have the good narrative. This one kind of has a poor narrative. It's been selling a little bit. It has low debt. It's kind of cyclical just based on the actual energy business itself, even though it's not directly related to that. It just kind of needs more. It's too expensive right now. So what I get? I got 796. Little less sure on that one. Just want to see if anybody owns it. ENVA, MPAA. They do own some value names, but this is not really enough to make me get excited about anything. Yeah, I don't know what else to say about that. It's all right. There's actually quite a few names in here today I haven't looked at before, which is kind of surprising. I usually... So this one's cheap. United States Antimony Corporation is engaged in the production and sale of antimony precious metals, primary gold and silver, and zeolite products. Its segments include United States operations. It's also in Mexico, precious metals recovery operations, processes ore primarily into oxide. The oxide is used to form a flame retardant system of plastic, rubber, fiberglass, textile goods, paints, coatings, paper, color fastener, and paint. Everything you can think of. Okay, blah, blah, blah. The insider. Haven't seen much insider lately, although less impressive when there's also someone next to you selling 6 times as much. And selling at the same price that you're buying, huh? And it's just been selling this entire time. How many shares are there? $103 million. The numbers are positive, but just barely. So not great. What is going on with the debt here? Holy debt. 2.4 billion in debt. What the heck? This seems kind of like a crazy number. Like, what the heck? This isn't the same company, is it? That's what the problem is here. USAC. Get out here. This must have been an insider, correct? Yeah, they were. Okay. Just a moment. Is it an ETF? No, this is what? USA Compression Partners? Oh, it's a ETF? What? I don't know why this isn't changing. Smart lookup. USAC. I don't know what this thing's doing. It won't update. Either way, it doesn't matter. It's not even the right thing. I'm probably going to just pass on this because this isn't... That's not what I thought this was. I feel like this is all strange to me. I don't know. I'm confused. So what the price is 24. So the chart's right. But this, I don't even know what to look at any of this. This is the wrong company. So disregard this one because something's messed up with the data, and I can't for some reason get. I've never had it where when I try to adjust this that it won't let me. Oh, there it did. But it still says Antimony Corporation. That's not right. Maybe this just didn't update yet because usually it just updates. Well, it might take a second. We'll see what it does. Yeah, it's trying to update now. Okay, actually, now I actually have correct numbers. And I get 1769. Yeah, either way, we'll come back. 'Cause I don't want to like start looking into it, and it's not like what I want. It's not the right numbers or anything like that. All right, so we got Nortech Systems as a provider of design and manufacturing solutions for complex electromedical devices, electromechanical systems, assemblies, and components. Design services span concept development to commercial design and include medical device software, electrical, mechanical, and biomedical engineering. It offers a range of value-added engineering, technical, and manufacturing services and support. Its manufacturing and engineering services include complete medical devices, printed circuit board assemblies, wire and cable assemblies, and complex higher-level electromechanical assemblies. Blah, blah, blah. So, okay. Everything looks good last year and the year before. Everything's positive cash flow. Cash flow is down a little bit this year, about halved, but earnings positive for the past few years. Book value is pretty steadily increasing here. I actually get this one is pretty cheap. Low debt, no acquisitions, low market cap. It's down a bit today. They just released earnings, EPS of 26 cents. And no one's looking at this. I mean, no one. We're down from, what did I get as EPS here? Whoa, okay, $2.54, but average is 61. So it looks like they're more in line with last year, or actually more like 2 years ago. Posted net sales of 34 million. You know what? Instead of that, let's just look at some numbers real quick here and just make sure this all looks somewhat kosher here. All right, receivables. Just seeing if anything stands out here. Nothing there. Net income's actually up. Cash is growing. No one's talking about this anywhere? $2016 was the last time anyone was talking about this? What? And it's been up that much? It got up to $17 from $8? And then everyone's radio silent on it? It just has leases? Share count's only 3 million. What? What was it? NY? No, NSYS? $30,000 shares moves the needle, huh? I'm just curious because I feel like there should be more on this. Plans close down its manufacturing plant in Blue Earth by the end of the year, leading to a layoff of 74 employees. In a letter to the Minnesota Department of Employment and Economic Development, Rapid Response Team says phased layoff for the plant. The first phase will take place on September 3rd. This one's tough. There's not much. I feel like there's not much on it. I wish I was able to get a little bit more on this one because it is interesting, but I don't have a lot of confidence in when I'm looking at it. had it as too expensive recently. I wonder how come my valuation changed so much. What did I add in here that made it so different here? Either way, I get 1263. Not really too expensive, to be honest. Small, low debt, needs more turnaround, foreign risk. I feel like it's kind of a poor narrative. I'm going to put it on deck only because I'm interested to follow it and see what else is going on with it. Anybody own it? There's like nothing. Renaissance Technology has it as a very small position. They just sold off a little bit. JP Morgan holds 2 shares. Big numbers. Interesting. I don't know what to say about all this. The numbers, I think the numbers look decent. I'm gonna say good fundamentals, to be honest. But we'll have to follow that one. It doesn't look like a buy right now, especially on that chart. I mean, the chart looks ugly. I mean, it looks like I must be missing something. I don't. Maybe this earning per share is garbage because it doesn't really say anywhere. But I mean, everyone's taking this as terrible news, especially after that kind of a rise. I mean, you haven't seen that rise in 5 years. Well, that's not true. It pops every once in a while. It's actually at all-time highs last month. Strange. All right. Next one I got is Kina Metal. I'm not sure. Industrial technology company which serves customers across the aerospace and defense, earthworks, energy, general engineering, and transportation markets. Metal cutting, infrastructure. Offers products including milling, hole making, turning, threading, and tool making systems used in the manufacture of airframes, aero engines, trucks, automobiles, ships, various types of industrial equipment. So, okay. Cuts metal. Shapes, cuts metal. Looks good on a book metric. It's got an insider. Michelle just sold, but Chobi just bought. I can tell pretty quick it looks a little expensive to me. I'd just like to see it get a little cheaper because otherwise it looks decently ran. I mean, look at, net income the past few years, it's good. Which retained earnings? 46% now. That's fine. Market cap's $2 billion. We got a hold from January, 20-cent dividend. I didn't notice the dividend. Wow, they were consistent with that too. All right. They find it overvalued, blah, blah. All right, well, I can say real quick too, it's too expensive for me. There's an insider. It's too expensive. It's good fundamentals, low debt. Well, I wouldn't say low debt. It has some debt. Kind of needs more. Has a dividend. I'm gonna put it on deck. It was not terrible. Just not. I mean, it's simple as that. It's just not cheap enough for me right now. Yeah, it looks like it's been a little bit of a mess here. Oh, it's too bad. What else? Oh, that's what I was doing. I was checking to see what my number was. I got almost 24 bucks basically. 24. Duh. See if anyone owns it or anything. See if anything's going on with it. Guys are doing a lot of selling for their top positions. Nah. No, once again, I'm just not seeing too much on these. Some of the ones earlier have been interesting. But not cheap enough for me here. All right. Gotta start doing my streams earlier. Must be everyone's watching in the earlier stream time here. Lancy Homes Corporation, residential home builder, designs, construction, markets and sales of suburban and urban single-family detached and attached homes in Arizona, California, Colorado, Florida, Texas, and Metro New York. And that just kind of goes on and explains like the areas that they're working on. I had an insider, a few insiders actually, over the past few months here. Oh no, I'm over here. A lot of purchasing going on around the $11 mark back in March. Like a lot back in March. Now there's some selling going on. Wow. Like a lot of selling going on. 24 million? What does this chart look like? What? How many outstanding shares is there? 36 million? There's 36 million shares outstanding. And then these guys sold 24 million at $6. What are these? $6. When was it? On 5/14? What does that even mean? That doesn't make any sense. What am I missing here? I want to know why these numbers don't ever appear. Like these ones were at 1160, which everything was at 1160 around there. So why are they selling it? How are they selling at $6? Is more the question. Oh, something strange about that too. Not quite sure what's going on there. Trades doesn't trade too high. Historically, it's had decent cash flows. It's been struggling this last year. It's slowly starting to increase its debt. It did some buybacks, it looks like. So what's let me look at Seeking, see if I can figure out. Some of these are weird tonight. I don't know. Usually I don't feel like I'm so confused on some of these, but some of these are like, what the hell's going on here? This guy said in December this was mortgage rates decline slowly. Yeah, that's the truth. So maybe it's just because of that. Yeah, but they're staying high. I mean, the only good thing is inflation pulled back. LSEA. So another one I think I'm just gonna kind of keep an eye on here. It's got, I don't know, it just kind of needs more. It's another one that just needs more on deck. It's a little too expensive right now. Not bad. Its debt's going up, but it paid off shares too. Some strange insiders. I don't know what's going on with the insider, why that number looks like that. Just because of that, I'm going to rate it a little lower than I normally would. Just until I can figure that out. I'm sure I'll look at it again. Just seeing if anyone's talking about it. It's 200,000 shares. Not yet. Who caught my eye? I'm just starting to see what's going on here. Police is starting to get some momentum. Got down to 7. What was the? Oh my god! Some of these, that's what I'm saying. I gotta keep on these names. What did I give this? I know it looked ugly. Ugh, I got $8. Ah. I just gotta stay on top of some of these names. I don't know how I missed this or jump. Slowly just been going up. All right, what did we say? 960. I don't think there's much else to add on that one. All right, what do we got? Last one for the night. I'll go through this. I don't know if I'm going to end the stream right there and then, but just kind of peek around. I didn't get to any of the fun stuff. Now I think about it, I forgot we was going to go through some of the funds, which if we don't get to it today, what did Scion have? Just like to see their new stuff, essentially. BP, Baidu, First Solar, Cigna, Physical Gold Trust, huh? Interesting. Interesting choices. Advanced Auto, still in advanced, huh? That's another one I missed. In Vital. Those probably are all too late to get into now. Not to say that they won't jump more, but it's tough to follow Burry. You're always steps ahead. If Burry's in it, he's been in it. Unless you just happen to get lucky and you happen to catch him when he's just doing a filing, but no matter what, you have to report from before. So. All right. Green Brick Partners is a diversified home building and land development company. It's engaged in all aspects of the home building process, including land acquisition and development, entitlement, design, construction, title, and mortgage services. Home buildings. Building all kinds of stuff. Kind of all over the South. Company owns or controls approximately 20,000 home sites in high-growth submarkets. Okay. Book value looks amazing. And it's trading like it's great. Numbers all look good. It's had some rough years before, but I mean, it's definitely improving. It's been buying shares back. Has insiders. What? This is looking good too. What's going on? Besides the fact that it looks a little expensive, it looks pretty good. Has low debt. A decent amount of cash. Margins look good. It's 2.5 billion. It's good size. I mean, the insider buys it's nothing fantastic. No dividend. Revenues are up. Everything looks pretty good about this. What is home building doing right now? Well, they're doing well. Who owns this? Anybody? Oh my god. No, that's the was it GRBK? Yeah, there we go. Greenlight, DME Capital have it as large positions. Is this the same? No, it's not. JBF has it. As their largest position, even though he sold a bunch of shares. How many shares outstanding? 45 million? Wow. It was trading down in the under 40. Then it was interesting. This one looks good. Was there insider? Why didn't the insider pull up on this? Yeah, there's insider, right? Did we already look at that? All right. Good fundamentals. Low debt. I'm gonna call this a great company, good management. We'll put it on deck for now. What is this done on the chart here? Get rid of this page. I don't need this. It's just a little too expensive here. And it's not like it's like crazy expensive. So I would assign this a bit of a premium. I wish they would do something with the dividend or something. Yeah, I actually get 58 as fair value on this one. 43.61. All right. It's interesting. It's expensive here, but I mean the chart looks good. It's just expensive up here. This does look like historically just creeping up. Wow. COVID got down to $7. Like, what in the world makes this worth $7 back then? Oh, it was struggling back then. Yeah, it was. Wow. All right. Well, that's all these ones. That's everything I had in here. So, we'll clear that all out for now. And while that's loading, so we can go and let's see what's going on with some of these funds. We just looked at Scion. I mean, everyone should have filed essentially. Buying Wolf. I wish there was a quick way to pull these tickers into, to CSV. Can I do that? Oh, subscription required. Of course there is. That would be a good feature, though. That would be helpful. So I'd like to just pull up the charts on some of these things. Well, you know, I guess we can just do that. What was the one I was just looking at? SPWH, right? Just want to save everything. You know how that goes. I've looked at these guys so many times I can't remember when the last time I actually looked at them was. So, oh shit, I didn't put enable on. Try this again. There it goes. And I probably won't delve through too many of these because Johnny and I were actually talking. Well, we said we'll probably do a bunch of these on the stream on Saturday. So we'll go through probably a bunch of the funds because sometimes it's tough to find interesting tickers. And like I said, even though I didn't have internet, I was able to just kind of like keep track of charting and stuff like that. So 345, this isn't that insane looking to me. So this is one that's interesting to me, at least. What was I just going to do? I was just going to look at something. I totally forgot. Oh, I wanted to look at short interest. I was like, what the heck was I just thinking I wanted to look at? Because I know they are historically like a really shorted company. They're up. They've been... Still 15% share short on April 30th, which is almost 17% of the float. It's only 37 million shares. I just want to check on that revolver that they were talking about. I'm sure I've looked at it before, but I'm sure I've looked at it on the stream before. In 22. They have till 27. That's all that revolver, actually. Interesting. This one looks interesting to me here. Just gonna put that down there. I would probably take a position in this, actually. So that was a quick, nice little random find at the end. I like that at the price. I don't think it's bad. How high will it go? I have no idea. Do I think we've reached kind of a pretty low valuation here? Yeah, I do. And honestly, it'll just be a starter position. So small, whatever I take. But definitely interesting here. All right, well, there you go. We'll finish up. I'll end on that. You know, obviously do your own due diligence. You know, I've looked at this a million times, so to me, it's not a big deal to just take the plunge here and actually purchase something. But looks cheap enough to me. I think it looks interesting, especially on the chart. It's starting to just come back here. We'll see if it can break through to like $4. Just looking at these. I think it could get up to $6 or $7. Which is kind of why I'm interested here. It's almost a double from here. All right, cool. All right, I'm just going to save all that stuff. All right, well, I saw there was a few people in here. Thank you so much for tuning in, guys. Like I said, sorry, I know the stream's late. It's tough to do it on a Thursday this late in the week. It's why normally I do Tuesday. And I'm still thinking about my timing with this. I'd like to do it earlier. It's just so tough with my lifestyle. It just doesn't work out well to do it before now. But either way, like I said, Johnny will be on with me. We're going to do, I believe, early on Saturday. I believe it's 6 o'clock a.m. So if you can't make it, it's cool. You know, just watch it whenever you can if you want. Or don't. Doesn't matter. Whatever. But yeah, I hope, like I said, I'm excited. I'm excited about the portfolio. I think it's coming along here. Obviously, like I said, it's been growing out. So far, it's been creeping up. With this many names, it's a little unruly, but I'm just getting used to doing it. And like I said, that's why I have these quick notes. That's why I use the charts. It's just a way to kind of follow things. And that way, if something like really starts to significantly change, the chart will show that to you. and then you can kind of reassess from there if you want to add or trim or even sell out, whatever your goal is. But yeah, I'm trying to think. A lot of names tonight were decent. There's quite a few that definitely are interesting to me. Just didn't quite meet my criteria there. Just not quite cheap enough, or I just want a little bit more with them. But other than that, was there anything else on the dashboard moving? Like I said, I know the meme stocks are all over. What's game stop doing? Actually, I don't care about this. Let's see what these are doing. Post market. Maybe we found a floor. Maybe. I don't know. It's tough to say with these. What's Reddit doing right now? Reddit's been up. Oh, Reddit was up a bit in the after hours. Ink Steel to train AI on Reddit data. Well, that's a good narrative right there. You're gonna watch this pop. This will definitely pop on this news. I mean, 11 is maybe 11% in the after hours already accounts for it. I forget it hasn't been public that long. It seems like a while ago. It's just, oh my god, it's just a few months ago, huh? All right, interesting. All right, I don't think I have anything else to add there, guys. All right, everybody, have a good night. Thanks for tuning in if you were able to. And like I said, we'll see you guys Saturday. Everybody have a good one.